Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into the financial report of enVVeno Medical Corporation. Will this company's future flow smoothly like blood through healthy veins, or will it be blocked by challenges? Let's find out. enVVeno Medical Corporation is a medical device company. Think of them as working on high-tech solutions for blood flow problems, specifically in the veins of your legs. They're developing replacement valves for veins. The company is developing replacement venous valves for patients suffering from severe chronic venous insufficiency. That means the company is trying to solve a problem where blood doesn't flow correctly in the legs, leading to pain and other issues. Their main product, VenoValve, is in the late stages of testing. They're also working on another product called enV. If approved, the VenoValve and enVA will coexist. Now let's talk about money. As of late March, the company had about 38.9 million in cash and investments. They believe they have enough money to cover their expenses for the next year, but they mentioned they may need to get additional capital. This is a good thing, but keep in mind that they might need to get funding, which might mean a stock offering and dilute existing shareholders. Where is their money? Well, most of it is in short-term investments, specifically in US government securities. This is a safe place to keep their cash, but it also means they're not getting a huge return on their investments. They also have some laboratory equipment and other items. The total value is around $142,000, which is not that significant for a company of their size. They owe a bit of money too. Their current debts include around $703,000 in accounts payable. They also have accrued compensation costs, which probably represent salaries of around $511,000. enVVeno notes that they may become involved in legal claims as part of running their business. They seem prepared to cover costs from these if they think settlements are likely and can be estimated. The report mentions stock options. Stock options are a form of compensation. This section is not really interesting, so let's move on. Let's peek at the financials. For the first 3 months of this year, they lost $4.5 million. That's less than the $5 million they lost during the same period last year. A lot of their spending is on research and development, which shows that they are investing in the future. The research and development expenses were about $2.6 million. Selling, general, and administrative expenses accounted for $2.4 million. These are the costs of running the company on a day-to-day basis. enVVeno used $4 million in operating activities for the first 3 months of this year. This means money is going out of the company, which happens to companies that are still developing and are not selling anything yet. They were able to bring in $5.2 million in cash from investments. This is good, but it's not enough to offset the money they are losing. So what's the story here? Veno Medical is burning cash as they develop their products. That's normal for a company at this stage. The key question is whether they can get their products approved and start generating revenue before they run out of money. Now, let's step back and take a broader look. enVVeno is betting big on a novel approach to treating a widespread and difficult condition. If their products work and get approved, they could be very successful. The biggest risk they face is that their products won't work or won't get approved. Clinical trials can be unpredictable and the FDA approval process can be long and expensive. Another risk is that they might run out of money before they can get their products to market. They will likely need to raise more capital, which could dilute existing shareholders. In conclusion, enVVeno Medical is a high-risk, high-reward company. They have a promising technology, but they face significant challenges. Whether they succeed or fail depends on the results of their clinical trials, their ability to get regulatory approval, and their ability to raise capital. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate deep dives. Until next time.